Welcome to Financial Market Insights for Traders. I'm Sophia, and in this episode, we're unpacking a bold move that has shaken up the global financial landscape. The United States officially adding cryptocurrencies like Bitcoin, Ethereum, XRP, Solana, and Cardano to its national strategic reserves. Yes, you heard that right. On March 2nd, 2025, President Donald Trump, now serving his second term, stood at a podium in Washington and confirmed what many in the crypto world had been speculating for months. The U.S. has begun actively holding crypto assets as part of its sovereign wealth portfolio. This is the first time a leading global power has done something of this magnitude, and the ripple effects are going to be massive. So today, we're going beyond the headlines. We're talking about what national crypto reserves actually are, why they matter, and what this means for traders, institutions, central banks, and yes, the entire future of finance. What are national crypto reserves? Anyway, traditionally, when we talk about a country's reserves, we're talking about gold, US dollars, treasury bonds, and other fiat based instruments. But the concept of crypto reserves changes the game entirely. It's the idea that a government holds cryptocurrencies, assets like Bitcoin or Ethereum, in the same way it would store gold in a vault at Fort Knox. Why do this? Well, a few reasons. Crypto provides diversification, it offers a hedge against inflation, and in some cases, it helps nations sidestep the geopolitical dominance of fiat currencies, like the US dollar. And with the US officially taking the leap, that sends a loud and clear message to the rest of the world. Digital assets aren't fringe anymore. They're now sovereign grade finance. Why the US made the move now? So, why 2025? Why now? Let's look at the macro backdrop. Inflation is still a threat. The US dollar has shown some signs of long term structural weakness, and central banks worldwide are moving toward more digital strategies, including the rollout of CBDCs, or central bank digital currencies. Meanwhile, Bitcoin has maintained a firm recovery since the 2022 bear market. After bottoming out near $16,000, it surged past $65,000 earlier this year on the back of new ETF approvals, record institutional inflows, and you guessed it, a halving cycle that reignited bullish momentum. Ethereum, too, is heating up thanks to major network upgrades and new staking protocols. Solana, XRP, and Cardano are each carving out their own ecosystems with smart contracts, fast settlement layers, and decentralized finance platforms. These aren't just speculative tokens anymore. They're infrastructure for the next financial era. The US government adding these assets to its reserves isn't just a signal to the markets. It's a recognition of long-term value. What this means for the global economy. So, what are the implications? First, diversification. With crypto in the mix, the U.S. isn't just relying on paper-based reserves. Bitcoin, with its capped supply of 21 million, functions like digital gold. Ethereum adds smart contract utility. XRP offers cross-border liquidity. Solana and Cardano bring high-speed innovation. Together, they make for a diversified, digital native reserve basket. Second, inflation hedging. Fiat currencies lose value over time, especially when central banks crank up the money printer. But Bitcoin? It's deflationary. And by putting it on the balance sheet, the U.S. essentially signaling we're hedging against ourselves. That's a huge psychological shift in how we view monetary sovereignty. But there's risk here too. Crypto is volatile. Reserves now fluctuate with the market. A 10% dip in BTC is one thing for a retail trader. It's another thing entirely for a government holding billions. Then there's the geopolitical angle. The US making this move forces other countries to act. El Salvador started the trend in 2021. Now the US has legitimized it. What happens when China, Russia, or the EU start stockpiling Ethereum? What if oil trade is settled in Bitcoin instead of dollars? We're looking at the slow dismantling of the petrodollar and the potential birth of a decentralized reserve standard. That's not just monetary policy. It's a reshuffling of global power. Who else is holding crypto reserves? Let's zoom out for a second. El Salvador was the first mover. They bought Bitcoin aggressively, weathered the crash, and are now sitting on substantial unrealized gains. China plays it both ways. Publicly, they've banned crypto trading. Privately, they hold digital assets seized during crackdowns and are pushing their own CBDC with blockchain like properties. Switzerland hasn't made it official, but its crypto friendly regulatory stance and the activity in Crypto Valley makes it a likely candidate to pivot in that direction. Russia and Iran have used crypto as a workaround for sanctions, settling international trade in Bitcoin and exploring stablecoins to dodge U.S. financial control. So, while the U.S. the first major economy to formalize crypto reserves publicly, it's not the only country in the game. What traders need to know? So let's bring this down to the trader level. What does all this mean for you? First, crypto is now backed by governments. That's huge for long-term confidence. If you're trading crypto CFDs or spot positions, this increases the likelihood of upward momentum and long-term stability. Second, volatility is still in play. National reserves or not, crypto markets are wild. Expect increased price sensitivity to macro events, interest rate decisions, regulatory changes, and geopolitical shifts. Third, institutions are watching. The U.S. move will likely spark inflows from pension funds, hedge funds, and sovereign wealth funds. Liquidity will rise, so will complexity. If you're not already positioned to trade this next wave, you're late. But not too late. At crystalballmarkets.com, you can trade crypto CFDs at the lowest spreads. Bitcoin, Ethereum, Solana, XRP, all the major names, and with the tools you need to execute your strategy, whether you're trading short-term breakouts or riding long-term macro trends. Final thoughts. The United States adding crypto to its reserves is more than a headline. It's a turning point. It means crypto has graduated from internet money to sovereign-grade finance. It means Bitcoin is no longer just digital gold. It's monetary policy. It's strategic hedging. It's geopolitical leverage. We're entering a new era, one where blockchain assets are no longer fringe, but foundational. And if you're a trader, this is your opportunity. A chance to align your portfolio with macro trends before they become mainstream. As always, trade smart, manage risk, and stay informed. You're not just speculating anymore. You're participating in a financial revolution. This has been another episode of Financial Market Insights for traders. For more content and real-time trade opportunities, visit crystalballmarkets.com. We'll see you in the next episode.